Good afternoon. You are watching a midday market update prepared by Windsor Brokers. The U.S. session kicks with positive results on the U.S. weekly jobless claims and the housing starts with the data showing better than expected releases. Jobless claims dropped 13,000 to the 348,000, near the low of nearly 4 years, last time seen in 2008. U.S. housing starts also climbed higher than expected. 1.5% was today's release to 699,000 units in January, better than expected 689,000 units. That was today's forecast. However, negative sentiment in the markets persists as the Greece battles its mistrust with the Eurozone targeting the bailout deal that was delayed again. The single currency British pound are still lower on the yesterday's failure of Greece's bailout as Eurozone delays a decision on further aid to Greece and further tranche of 130 billion euros. Commodities also dipped lower with the gold hitting levels close to 1700 support. Euro dollar holds below 130 level, with the recent slight bounce above, still seen as correction, as Fibonacci level at 129.70 seen tested so far. Cable is lower, but in sideways movements after a recovery attempt from 156.43 low. Found a good resistance at 157.35. Next strong barrier, and the pair is currently moving just under 157. US dollar index is heading higher. It hits today fresh high at above 80, fresh 3-week high, heading towards previous highs at 80.38, 80.40 zone. Gold approaches on its recent fall important support level at $1,700, with further extension lower seen towards 1680 and the 1660 zone. Crude oil dented $101 per barrel support, but recovered quickly, currently moving at 101.55 area. The current situation in the market goes as follows. Euro is still in the strong downtrend of latest high at 133.20, hitting 50% Fibonacci retracement of the short-term uptrend from 126.22 to 133.20 at 129.70. Negative tone persists, however, extended studies on the hourly and 4-hour chart see scope for some recovery action before the fresh weakness starts. Previous support, strong support and higher platform at 130.25 now offers initial resistance, while gains should be capped at below 130.80. A low of 14th of February, also close to 131 and 131.20, where it's currently 20 days moving average. Focus on the downside, break below 129.70 to open next static level at 129.30, ahead of 129.00, 61.8 Fibonacci retracement. Cable is near-term price action is still in the sideways trading, moving within the narrow range after a sharp sell-off from 159.26 high of 8th of February, where the 200 days moving average limited the upside. Dipped so far to 156.43. However, the negative near-term structure keeps the downside in focus, with break of 156.43 to open way towards 156.00 Fibonacci level. Dollar yen is in strong recovery mode, currently correcting the recent gains that peaked. Dollar yen is in a strong rally, hitting levels just off 79.00, our initial target, after breaking above yesterday's brief congestion between 78.65 yesterday's high and 78.17 low, where the dips were contained. The next target at 79.00 and 79.52 post intervention end of October 2011 peaks, with the previous strong resistance zone at 78.27 expected to contain dips for now. Dollar Swiss is currently correcting the recent strong gains after breaking above strong resistance at 92.50, the previous range ceiling, extending gains so far to just a few ticks below 93.00, currently hovering around 38.2 Fibonacci retracement of the down move from 95.93 down to 90.87. Positive short-term structure keeps the upside in focus, with the corrective dips expected to be contained at above 92 zone in order to maintain the recent rally, with the 20 days moving average at 92.00 underpinning the past few days price action. Gold continues to trend lower of 1763, recent high posted on 3rd of February, as the recent today's weakness dipped below important supports at 1711 and approaching 1704, the previous low of 10th of February. Fibonacci expansion studies see potential on break of 1704 and 1700 to test 1704 to test 1701, Fibonacci expansion 61.8, with break here, which is the recent range floor, to possibly extend the losses towards Fibonacci retracement at 1692 of the latest up leg from 1650 up to 1763, with the further extension down towards Fibonacci 100% expansion at 1676. That would be the short-term target for gold. To avert immediate downside risk, regain of yesterday's high at 1737 is required. The crude oil is back to the strength. Near-term price action shows the pair sharply bouncing after hitting levels just briefly below 101 level, losing initial support at 101.20. That was also the previous double top of 31st of January and 26th of January. However, the positive short-term structure keeps the upside still in focus, and the latest pullback was seen corrective. Break above high of yesterday at 102.52 to open way towards 103, and recent high at 103.72 posted on 5th of January. Good luck.